What's up, guys? Brendan from Crypto Cauldron. July 5th. Rained out our July 4th. People still went nuts with fireworks, so it's still a good night. Um, so check out our Discord link in the description of the video. You know, at Crypto Cauldron, we specialize in trend analysis, current trends. We don't focus on blow off tops. We don't focus on necessarily historical data unless it relates to the current trend. That's just my niche, okay? So I give you where we are now in the market, what we need to see to improve the market, and what we could see that could hurt the market. That's what I do. It's really easy to do TA when the market is going one direction straight up. It's much more difficult to do TA, which is why so many YouTubers struggle with it when the market is wavy or coming down, okay? So that's my niche. We day trade here. A lot of us day trade in our group. We go in and out of the market. A lot of us took this short here yesterday when we hit the 200 because that's our market top. And that's what I want to go over real quick is the market top in Bitcoin, okay? Now, if you watched any of my videos the last 2 days, I said the 200 moving average is the market top, right? Not only did I say that, I said that if we hit it, we're going to roll, right? So at the same time, people are posting Bitcoin 39K videos came out yesterday from a big YouTuber with a couple 100,000 subs. He says, we're going to hit 39K. No, we weren't. I posted in the morning when we had our very first candle, we're going to roll, right? And look what we did. We rolled. I said, literally, we're going to roll, we're going to find the cloud for support, and we're going to end up exiting the cloud, okay? I anticipate us exiting the cloud if this selling volume stays the same or picks up slightly, okay, on the MACD. And just look at it, look at the top. So the reason the 200 moving average is the most important resistance line, it's not the 35, it's not above it, it's not the volume, although it correlates directly to the volume. But the 200 moving average, we've lost since April 17th, we've lost it, okay? So when you look at every single time we've battled it, even when we get above it, we lose, right? You can circle these going all the way back to April 17th. And that's the point, is that you keep, this is current trend, okay? This is June 15th. This isn't like price data from 2014, looking at, you know, RSIs and whatnot, right? This is current data. Got above the 200 here, fought it 2 days, hit the 233, and then rolled. The 233 is not on this chart, but we hit the 233 right here with this black candle and rolled. So let's see, I want to show you exactly what I'm talking about. See all this data here, all this space, this is dead space. So when you say why are there no circles here, because this is all dead space. The 200 was way up here, right? So we didn't have a chance to encounter it again. But let's go back. So this whole area is circled. This is May 12th when we dipped, right? That May 12th dip was that legging down, right? And you cut basically the Bart Simpson pattern here as well. If you look at this, because you have your uptrend, then you have your flat top, right? You have your flat top being cut. You have your swing pattern failure right here. And then the Bart Simpson pattern always returns basically right back from where it came from. You see that? And then that's when you would draw, you draw your eyes and all that stuff, and you get the Bart Simpson pattern, right? So that's basically the Bart Simpson pattern. But look, again, the key thing to see in this is the 200. You're hitting it, you're above it, you're below it. You're above it, you're below it. You dip hard after you get rejected here and come back up. Oh, I'm back above it, everything's good. Form a double top right here, dip back down below it. Get above it, boom, you're done, right? But that's May 12th. Okay, so people say, oh yeah, May 12th, big sell-off. That was May 12th. The setup before this happened before this, all right? Just follow the 200. This is all you have to do, and you can see exactly what happened in the market. So the 200, this is a normal selling area, right? You have these dips when you're in a bull run. You started losing the 200, guys, way before this. When you start dipping below 200, the 200 is 200 trading days. Okay, that's why it's such an important indicator of market health, because it's 200 trading days of trading. So when you start losing that, going below the average of 200 days, the market is severely weakening. Not enough people understand that because not enough people in the space are traders. They're holders, right? So they don't understand these things. But this was your key indicator here. This is when any YouTuber, and I wasn't in the market then, this is April 17th. Any YouTuber worth their salt, go look at their videos from April 17th and see what they're saying about this. Are they predicting 200K Bitcoin from here? Or are they saying, hey, the market's rolling over? Because this is your key area. When you saw this happen, as somebody that does TA, right, as somebody who's been day trading for 20 years, when you're this far below the 200, look at this. You should have known the market was rolling. You should have known by looking at this that this was coming. This sell-off was coming because you fell not just below the 200, you were well below the 200. Okay? And this was your warning. This happened April 17th. So we've been in a downtrend since April 17th. Okay? That's when we lost the 200. Now bringing it back to current time frame here, you don't even need to draw pennants. You don't need to draw shapes. You don't need to have the super guppy on. And since June 15th, all you need to do is look at the lower highs, guys. This is the current market trend right now, okay? You can put all these things on to see what we're dealing with, the various indicators, but I wanted to keep this clean and simple for you because this is what we've been talking about here at the Cauldron for the last couple of days. Lower high, right? Downward trend, and guess what it's following? It's following the 200. It's all you need to follow right now, guys. It's just a downward trend, and now we dip down. As you can see, like I predicted we would yesterday, we're probably going to fall through here. Now, the question is, are we going to stay like in this range and just consolidate here for a little bit? Or are we going to go further down and start gearing up for a dip? We don't know yet because the volume this weekend has been really lackluster, to say the least, right? It's just not been very strong. And when we pull up the MACD, get a better view of it, you can see that we are selling, but then you can see it lightening up, right? That's that white candle, the retracement, which is normal when you hit support. But you want to see, for big volume days, you want to see this, right? You want to see action above the histogram, way below the histogram. When you're just doing this, this is much weaker. As you can see, this is just not, even though yes, you're getting buying and selling, this is weaker. You want these big waves. The big waves is what gives you the big propulsion up or down, right? And we're not getting that yet so far today. Not to say we couldn't get that, but we may end up just sitting here on the cloud, or we may end up quite simply coming through here, doing something like this, and just, consolidating, waving back in this area here, right? I draw a lot on my charts. Well, that didn't work. I draw a lot on my charts, but let me clean this up a little bit with the eraser. So that's the two scenarios for today, guys, is we either are going to just come back into this region here, or we're going to possibly, if there's a volume increase, possibly pick up. Let me throw on these other indicators you can see. Again, this is a 4-hour chart, guys. 4 hour and 1 hour is what I do 90% of my trading in. That's for looking for key patterns. You can go out to the weekly, you can go out to the daily, but those are lagging indicators of current trend, right? Because for the weekly, you have to have 7 days of trading to form the weekly candle. Okay. So yes, that's a good look back. That's the Monday morning quarterback thing. That's like after you have a crash and a parabolic rise and you look back and be like, oh yeah, look at the weekly. This is what happened. Well, yeah, because it already happened. The same with the daily, right? So we want to look at current trend, and the best current trend picture, I use 1 hour and 4 hour. I do a lot of trading in the 4 hour because I'm looking for patterns. 1 hour patterns have a lot of strength too. When you start looking at 5-minute, 15-minute, 30-minute patterns like head and shoulders, a lot of times it doesn't translate because you got to remember on a 15-minute pattern, you need 4 candles just to equal an hour, 1 hour candle. So it's not represented the same way. So we throw on, our friend volume here, throw on the guppy again. This is kind of my trading setup. I'll go over this in another video. So you can see the guppy turn silver. What does that mean? It means market indecision. It also means there could be a volatility in the marketplace. So, but basically, guys, just some indicators are better than others, right? The guppy is an EMA band that has color signifying like selling and buying. There's a tons of different indicators that do similar things. I like it. But again, that's your trend. Okay, lower high, June 15th. Try the 200 again, June 18th. Do you see the pattern here, by the way? June 15th, June 18th, 3-day period, right? You fall from the 200, you try the 200. What do we have here? June 29th, July 4th, right? What is that, 5 days? So 3-day period in between, 5-day period in between. Look what happened in between here after the second try, okay? So we had a bigger dip the second time. We had a much bigger dip. This was the 11,500 point sell-off, right? Right here. Not saying that's what's happening here, but you got above it, you tried it, 11,000 point sell-off. You got above it, you retraced it, and you got rejected again. So let's see what happens. The problem again is, guys, just the volume, right? I mean, look where the candle is right now in this price history. There's just not a lot going on here. If it does fall through, again, stepping off of volume, right? But this is also why sellers could really push the price down. But we need to see, these candles need to be dark red on the MACD. One thing I recommend doing, guys, okay, Dr. Bill Williams popularized this, but you should look into doing this. I think it's much more accurate. Change your MACD. The standard MACD settings are 926.9, I believe. Change them to the EMA numbers 534.5. Why? Because the fast length EMA 5 is 5 trading days. Okay, 34 is a good slow length. It's really like a mid length, but the normal settings are 926.9. Signal smoothing. You can Google these, what these mean. But again, I use 5. I find it to be, and back test any changes you make to any indicators, but I find this to be much more accurate. It picks up, okay, so in high volatility markets, you want a shorter trading period, like 5 days, right? Because, I mean, just look at this. Look at the difference you have in 5 days. This isn't like a steady climb or a steady decline. You're waving all over the place, but I find it to be much more accurate. I mean, you can see, again, back test it on your own, but you can see that it clicks to almost identical, the movements here. You have your little top, you start falling down. It's much more accurate. Dr. Bill Williams was a big proponent of this. Fred Tam is a big proponent of this, the power of Japanese candlesticks. So in this type of marketplace, I found that it works very well. It may not work as well in other marketplaces, but in crypto, it seems to be working much better than the standard settings. So check that out, guys. But yeah, so again, Bitcoin price prediction today. I posted the TA in our group already, but you know, right now we're just on the cloud like I said we would be. This is a flat bottom on the cloud. Flat bottoms are easy to fall through. If we can continue the selling, which faded off a little bit, you're going to fall through, which means you're going to continue the bearish, this Ichi's indicator, you have a bearish trend, which means the next cloud that forms would be red, okay? And then you trade underneath red clouds. So from there, if we get a step up in volume at some point, maybe tonight, maybe this evening, different time zones for different people, we could see a dip. But as of right now, it's not a lot of force to get us to a dip, but it is probably enough force to get us underneath and through the support cloud. This is your hard level of support right here. And this lines up with a lot of people's fibs. This is 33,363. Because again, Ichi takes support levels, an amalgam of support levels, and puts them in a picture of a cloud. And I'm very basic, and I like colorful pictures because I'm a very visual person. I like to see the selling, I like to see the support, I like to see the resistance, and I map out key resistance lines. I'll do a setup video for you about how I trade, and then I'll publish that hopefully today. I'll try to do that right now actually, and you can get an idea. But all right, guys, so enjoy your day. It's a holiday here for me. Working at an investment bank, we are closed today, which could also be why it's lower volume, even though my bank's not directly in crypto. But have a good day. Spend it with your family. If you're at work, have a good work day, guys. Happy trading. Talk to you soon.